Hello students and welcome to the lecture. So students, as we know that we are covering the financial knowledge and banking awareness part of it, and basically we are covering the banking history. Okay. In the previous lecture, we had started with the more details on the banking history. All right. This is some kind of the little bit revision. Whatever we have studied so far in the banking history, we are compiling them, and even we are noticing some more facts and figures which were not included in the previous lectures. Okay. So in the last lecture, I urged you must revise the facts and figures of one lecture before you come for the next lecture. I hope that you have followed it and then you come for this lecture. Okay. So with this note, let's start this lecture. So as I have told you, we are going to study the financial knowledge, banking awareness part of it, and we will cover the more details on the banking history. All right. So let's begin. So now we are going to talk about the World War II and the Banking Commission, 1920s to 1940s. The 1920s saw increased activism and awareness among Indians about the need for greater control over the banking sector. This period also saw the establishment of banks by the business groups such as the Allahabad Bank and the Bank of India. Hilton Commission 1926 examined the structure and organization of the banking sector in India and recommended measures to improve the Indian banking system. Reserve Bank of India was established in 1935 to regulate the activities of bank in India, serve as a central bank and control currency and credit. Okay, so now it's just a lineup revision to refresh the things we had studied. Now let's discuss about it one by one. Okay, so basically, if we talk about the World War, first, so can you tell me what was the time period of World War First? The time period of World War First was 1914 to 1918. Alright, that was the time period when the world countries were fighting with each other, and the Great Britain, which is also known as United Kingdom, which is a part of Great Britain. Okay, it was also a participant of the World War II. So, in short, we can say the Britishers were also fighting in the World War II. All right, and because the Indian economy was dependent upon the policies of British government, that's why we as Indians were also affected. All right, because on that time the British government was ruling the country. Okay, they were making the policies, they were implementing the policies. Okay, their officers were executing the policies on ground. So that's why when the British government involved in the war scenario in the World War First, their policy impacted the Indians. And why and how, and why we felt the need for greater control over the banking sector as Indians. Let me tell you one thing. It was the year of 1770 when the Bank of Hindustan was established. Right? Since 1770s, directly or indirectly, the Britishers were pursuing Indians to shift to monetary economy, right? All right, to shift to the monetary economy. Okay, it means that till the World War First, many Indians were dependent upon banking services, including the merchants, the traders. Okay, and even some of the local people and middle class people. They were starting depending on the banking sector because they were pursuing since 1770. All right. But during the British War or World War First, British government made policies in favor of British interest in World War First. Okay. And that's lead many services giving to Indians were either diverted or become harsh. All right. The Britishers directed their banks and even the banks of Indians, which were, you can say, operating on that time. All right. All these kind of banking activities were basically directed towards the British interest. It means that the loans which were giving to the Indians now were giving to the British companies. Okay. And the money kept in the banks were using to finance the British forces in the war. That's why the Indians whose surveys were either stopped or become hushed. It means that they now getting almost no support from the British government because the British government tried to facilitate their own interests in the World War II. Many Indians felt that it is a time when we should exercise our great control over the banking sector. Okay, and that's how banks like Allahabad Bank, which was established by the Europeans basically, and it was established by near about 1865. Okay, but the Indians started taking the stakes and the stocks of the Allahabad Bank. Thereafter, the Bank of India and also the Bank of Baroda and some of the major banks were establishing on that time with aim of supporting Indians. All right. Thereafter, even the British government felt that they required to improve the services. Okay, and need to brought the banking reforms. Why? Why suddenly the Britishers were starting felting that they should improve the services and started to making the banking reforms? Why? Come on, I have told you in the previous lecture. Because that was a time when other European powers were also coming to India. Or you can say Indian banking sector. It was a time when other European powers were also interested in the Indian banking sector. And that's make Britishers insecure that if they do not take any action, they do not improve their condition, they improve their banking reforms, then might be other European powers will take over the British in the Indian banking sector. And this will not have beneficial for British itself because who's control the bank and the money flow controls the economy. Remember, who controls the bank and the money flow controls the economy. And if the banking sector falls out from the hands of Britishers, then it will be controlled by the other European power. Okay, that's why the Britishers felt that they seriously need to improve the condition and services, and that we had seen. It's what the year of 1921 when the Imperial Bank of India was established after merging Bank of Bengal, Bank of Bombay, Bank of Madras, 1806, 1840, and 1843. All right, and even there was a consideration that the Imperial Bank of India should be established as a Central Bank of India. And then we see it was a Hilton Young Commission established in the 1926, examined the structure and the organization of the banking sector in India, and they recommended that we need to establish a separate bank as Central Bank of India. All right. As a result of which, the Reserve Bank of India was established in 1945 after passing of RBI Act 1934 to regulate the activities of banks in India, serve as a central bank and control currency and credit. Okay. And tell me one thing. First governor of RBI and headquarter, or you can say current headquarter and headquarter while establishment. This is the question. You all have 20 seconds to answer it, and the time starts now. I had told you. Now I want you all to give the answer. Okay, time's up. The first answer is Sir Osborne Smith. Okay. Headquarter current is at Mumbai, capital of Maharashtra. Okay. And when it was established, its headquarter was as Kolkata, capital of Bengal. Okay. And one striking feature it has. On establishment, was working as a private body till nationalization in 1949 by independent Indian government. Okay. After the establishment in the 1949, Reserve Bank of India was basically working as a private body, and in the 1949, the Indian government converted into the nationalized bank. All right. Thereafter, the State Bank of India was established in 1955 through the nationalization of the Imperial Bank of India, became the principal commercial bank in India. All right. And also remember one thing. After the establishment, the SBI also worked as an agent of the Reserve Bank of India. All right. After the establishment, SBI Act 1955, the State Bank of India worked as a agent of the RBI. It means the places where the RBI does not have any access, SBI works there. And even today it is continued. Even today, this is continued. Alright. Now the post-independent phase means 1947 to till date. After India gained independence in 1947, the banking industry witnessed significant changes due to economic growth, financial services requirements, and technological advancement. Okay, remember one thing. However, the banking sector evolved mostly during British time. Means from 1770 to 1947. Alright. During this time period, the banking sector evolved. Mostly of the services evolved during this time. But remember one thing. Banking industry experienced real growth and reforms after independence. Okay, it means that the Britishers just only evolved the banking services for their own benefit. Remember, we had discussed mostly banking activities, or you can say mostly banking decisions were taken in favor of British policies, trade, and commerce. Okay, because they only having interest to fulfill the British goal. They did not have any, you can say, sympathy and any vision, any will to develop the Indian people. All right, but when India gained independence and we got our government, or our, you can say, the self government, it means that we were not no longer under the control of any country. Then we started focusing on our needs and development of banking activities for our people, means for Indians. That's why we had witnessed a significant changes, economic growth, financial services, and technological advancement. Okay, so let's discuss about it. The first thing we did is the nationalization of banks. It was the year of 1969. India government under the Prime Minister Miss Indira Gandhi. Okay, Mrs. Indira Gandhi. India nationalized 14 major banks, including the State Bank of India. Okay, which was basically nationalized in 1955 and converted from Imperial Bank to State Bank. All right. About these banks, we had discussed already in the previous lecture. You can go and check it out. All right. This was done to increase the government control over the banking sector, promote economic development, and ensure that credit was available to various sectors of the economy, including agriculture and small scale industries. All right. So let me tell you one thing. When India gained independence, mostly banks were private. Mostly banks which were working in India during that time were privates. Why? Because the British banks or foreign banks mostly step out after independence. Why? Because they were only doing business in India for their own benefit. But when the British government stopped existing in India, they also pulled out. So the remaining banks, which were the Indian banks, were mostly under the private ownership because the government was of the Britain, and when the government removed, the British banks removed. Okay. And remember one thing. I had told you a golden statement, which was no one is more greedy than banks because they are operating for earning the interest and their own profit. Okay. And as the example we had taken, suppose that's a bank called XYZ. Okay. And there are two people. All right. This person could only afford the interest rate up to 4%, and this person could attend the interest rate even for 8%. Okay. Their desirable loan amount is rupees 10,000. All right. So that person will give rupees 400 as interest. That person will give rupees 800 as interest. Okay. So by seeing it, obviously we could say that person offering more interest and profit to the bank. So the bank will prefer him instead of him. Okay. Whether that person is a farmer, student, a person who is building his house and whatever he is doing, if he is not able to pay the desirable interest rate to the bank will prefer the another person. All right. And that was really happening. And why it was not right? What was the reason it was not right? The sole reason was the sectors required priority were suffering. Okay. Because private banks were mostly focusing on their profit motives. All right. And even if I am the private person and I am having a bank, then the bank is under my ownership. No one from the outside can direct me. So that's why it's become very, very important that the government should increase their control over the banking sector, promotes the economic development, and ensure that credit was available to various sectors of the economy, including the agriculture and small scale industries, which were not able to take the loans at higher interest rate. And that's the result. 14 major banks, including the State Bank of India, were nationalized, or you can say put under the control of Indian government. All right. In 1980, additional six banks were nationalized to further extend government control and achieve socio-economic objectives. The first nationalization was done in the 1969 and thereafter in the 1980. In the 1969 nationalization, we had nationalized 14 banks. In 1980 nationalization, we had nationalized 6 banks. Okay. So remember these details also. Thereafter, the banking sector reforms, which is a major milestone in the Indian economy. 1991, they initiated a series of economic reforms known as liberalization, privatization, and globalization (LPG), and it was officially named as New Economic Policy. At some places, you could also see it as NEP. 1991. These reforms aim to open up the Indian economy and make it more market oriented. Listen, however, after the 1969 till 1980 and till 1991, We had nationalized the bank with the aim that if the banks were put under the control of the government, then might be we could do more for the people, for the private sector, and other things. But what generally happened due to corruption, mismanagement, okay, ignorance from officials, and etc. Due to various of these reasons, our economy suffered a lot. Even the banks were hit apart. Okay, that's why the first thing we observed is the liberalization. It means that the government should, you can say, release some regulations so that the banks could operate by themselves. Second is privatization. Means the competition and the profit motive is important for the economic growth, and thereafter for the globalization. Means that we should also let the foreign banks enter in the market. This will be beneficial for the Indian market. All right. Banking sector reforms were a crucial part of this process, leading to the entry of new private sector banks and the liberalization of interest rate. Interest rate means rate charge on the loans, and this could not be low down the base rate. Okay, about base rate, we had a serious discussion in the previous lectures. Okay, but even we had discussed about the base rate in the previous lecture, and remember one thing, we had also discussed about the exceptions of base rate, right? And what are the exceptions of the base rate? First is banks on employees. Okay. Second, if the person belongs to the priority sector. And the third, loan against fixed deposits. Okay. So these are the three main cases in which the banks can give the loan below the base rate. Okay. But all the other cases, there is a committee. And what was the name of that committee which decides the interest rate? Come on, I had told you. 20 seconds you have. Time starts now. Which committee is responsible to decide the interest rate in the banks? All right, time's up. The committee name is Assets and Liabilities Committee. In short, also known as ALCO. Okay. So basically, every bank is allowed to decide the interest rate, which could not be below the, every bank is allowed to decide the interest rate, which should not be below the base rate. And Assets Liability Committee, in short known as ALCO, is basically responsible for this kind of thing. All right. Thereafter, as we had discussed, there was a entry of new private sector banks. Post-liberalization period saw the entry of new private sector banks like the HDFC, ICICI, and the Axis banks. Okay, if we talk about the full forms, then basically HDFC stands for Housing Development Finance Corporation. It is one of the leading bank in India. Okay, and if we talk about the ICICI, then it is known as Industrial Credit Investment Corporation of India. Okay, and remember the Axis Bank do not have any full form. Do not have any full form. Okay. Thereafter, we had seen the foreign banks also entered in India, like the Citibank. It is the American bank. Okay. like the HSBC, which stands for the Hong Kong Shanghai Banking Corporation. Okay, it is a Chinese bank. Then the Standard Chartered, which is a Bank of London. Okay, so these are some of the major foreign banks which got their entry after the 1991 in the Indian market. All right. Thereafter, the technological advancement we had discussed about it. Bank invested in the technology leading to the automation of banking process, introduction of ATMs, online banking and mobile banking services. This greatly improved the customer convenience and the accessibility. About all of these things we had discussed in the previous lecture. Okay. Thereafter, the financial inclusion initiatives. I had told you what we mean by the financial inclusion. The government and banks focused on promoting the financial inclusion by extending banking services to unbanked and underbanked population. Major schemes run by the governments are the Jan Dhan Yojana, Aadhaar-based banking, and direct benefit transfers. Okay, and also promotes the no frills account, which are often called as zero balance account. All right. Thereafter, consolidation and mergers. Several banks mergers and consolidates have taken place both in the public and the private sectors. The examples are of it: Bank of Baroda, Vijay Bank, Dena Bank, and the merger of SBI with associate banks. Okay, what do you mean by the consolidation and mergers? We had also discussed about them. Regulatory framework. Reserve Bank of India acted as a primary regulator to control the bank sector. Basel norms for capital adequacy were adopted, how the capitals could be increased. Risk management practices were improved, like the credit risk management, market risk management, and other things. Credit growth and non-performing assets. About NPA, as I've told you, we will have a detailed discussion in the upcoming lectures. But so far, I have given you a basic introduction. NPA means those accounts which remain dormant for last 90 days. Okay. So the banking sector experienced significant growth but also faced challenges related to managing non-performing assets. Stricter norms and regulations were introduced to address these issues, like how the bank could increase their credit growth, it means their income, and how they could counter the non-performing assets. All right. Expansion of financial services. Banks diversify their services beyond traditional banking, including insurance, asset management, and investment banking. This kind of services also introduced in the Financial Services Charter of Banks. They are no longer only the traditional banking institutions, which means accept the deposit and lend the loans. Inclusion of rural areas. Initiatives like the Pradhan Mantri Jan Dhan Yojana aim to bring banking services to rural and remote areas, extending financial access to a broader population. And it is basically a part of financial inclusion. It means that people which are not a part of the mainstream or which are somewhat living in a remote area or areas, they should be also included in the banking sector. Okay, like the Reserve Bank of India was nationalized in 1949. Then 1969 major 14 banks were nationalized, and in the 1980 6 banks additionally were nationalized for the better control of the banking sector. Moved aim to increase banking penetration, especially in the rural areas, and promote financial inclusion to give the preference to the priority sectors instead of focusing on money making sectors. Post nationalization phase 1969 to 1991. During this phase, the government continued to expand the reach of banking services through nationalized banks. Alright. The priority sector lending concept was introduced to ensure the adequate credit flow to sectors like the agriculture, small industries, and weaker section for their better management and upliftment. Thereafter, we had seen the liberalization phase introduced in the 1991 and continues to till date. Adopted the economic liberalization policies leading to the significant reforms in the banking sector as we have discussed in the lectures. Okay. Private sector banks allowed to enter the market, foreign banks established, presence in India increased, and technology driven banking sectors increased. If we talk about the conclusion of all these things, then the history of banking in India reflects evolution from the ancient times, from the mention of the Vedas, to the modern banking systems we have today. It means after the nationalization. From usury and credit instruments in the ancient times to the nationalization and liberalization phases we are experiencing now, banking industry has played a vital role in supporting India's economic growth and development. All right. Understanding the history is essential for the candidates preparing for competitive exams as it provides a context for various banking reforms and developments. And you can also say whatsoever we have discussed are just not only for your exam but for increasement of your knowledge, your exposure, and how do you deal with the career goals of yours. Because when you enter in the banking sector and any other exam, then if you know the background of that thing, it will help you a lot because you can feel it. Okay. So students, basically in this lecture we had finally completed the banking history. In the next lecture we will start with the banking evolution. Till then, just revise all the facts and figures we have discussed in this lecture and prepare yourself for the next lecture. With this note, let's end this lecture and thank you.